Globally, we have watched as the world turns into a dismal, rotting page in the book of history. Never before have the fundamentals meant so little and the central bank mischief meant so much. In 1920, the Fed, despite its newly granted powers, did not intervene in the Depression, and within 1 year, the economy began moving again. By 1929, their manipulation of the financial system was clearly apparent, and the result was 25 years to return to its previous levels. You came here for the truth, so let me unveil that for you. So let's get into this. What exactly is rising today? Because something is always on the up. We can see that where assets tend to move together. So you will see, for example, everybody's really scared today, so gold goes up, or everybody thinks that the economy is doing well, so equities rise. And then there are different sectors. So maybe the tech sector does really well, whereas the biotech industries do poorly. And you could see these sort of trends. But, let's just look at this time exactly what's happening. Well, I've mentioned it previously, but it's right here, and I'll bring out my highlighter. Global cyclicals began going major overweight to defensives, just as global economic data again rolls over. The economy is not doing well. And you can see the analysts and the fund managers, hedge funds, and everything else have decided to change exactly where their money is going. And what this tells me is that even for all the, let's call it big money, but it's not the true big money is fleeing a lot of your traditional equity investments, blue chip stocks, small cap type things. So what I can see is that it's a trend that is continuing. It's not something that has been going on now just for a short period of time. We have seen this take place ever since QE3 stopped. And is it a coincidence then that as soon as all of the garbage fake money stops being poured out, that the true colors really begin to reveal themselves? Let's look at this next one here. As you can see, profit margins peaked in quarter 4 of 2014. So you know that with everything they've been putting into this, you know that corporate profits are still dismal. Even though they've shown a rise, it really isn't the case as you look at it, because they can get corporate profits up, but as a result, they just basically have to fire a lot of people, and they quote unquote increase productivity. That's their term that they love to use. And what we're looking at is right up at the top here. That's the peak, and it has come down ever since. It's been, relatively consistent, in fact, since that peak. Now, this can show a similar trend as you look right here in this region. You can see the same sort of thing happen prior to the recession a few years back. Whether or not that will continue, we'll have to see. But this is just one of so many indicators. I would say that corporate profits on this level, corporate profits are essentially one of the most important things, because a company has so much control over the political spectrum. They have control over basically everything. And what that allows them to do is to create an environment which is conducive for their profitability. So if they need to have favorable tax laws, they can do that. They can make that happen. But what we have seen here is that in a decline, they try harder and harder. They fire more people. They do what they need to do. But when it doesn't work, it comes collapsing down very quickly. And that's the way I'm seeing the trend happening. Let's look at this here. As you can see, U.S. equity secular valuation bear markets end with the 7 times Shiller PE and with more recessions. Okay, it's a very complicated chart. A lot of people aren't really interested in this. All I want to note is that based on this chart, there's a lot of stuff going on. Based on that, look at this line right here. As you can see, a downward trend. The downward trend shows you exactly where we are headed based on all these other previous ones. Now, I'm not going to get into the details of it. It's basically the S&P and the Shiller PE. They're using those together. It's interesting to say the least, but I'll move on. All right. Another indicator showing you a downward trend. The S&P, in fact, once again, poised to go downward, and if you combine this with the Federal Reserve's balance sheet, which I've shown you just recently, shows yet another decline headed this way. Look at this. You're looking at the defensives whenever you see government bonds, which I would have to think at this point are the most dangerous investments, but you know, this is all mainstream media type stuff where you can see that the defensives are rising in this case because they're looking for safe havens. They don't want safe havens in things like precious metals. They want safe havens in things like governments who are going bankrupt. That's interesting. So anyway, that's it for this video. If you found it informative, please give me a thumbs up. If you found the video informative, then you'll definitely want to check out my book. You can actually flip through it. If you go over to Amazon, they have a look inside feature that allows you to flip through the pages of the book to see if you like it. Take care.